We're back, and the folks at Financial Derivatives Company are not missing the big stories around the World Bank and the IMF global economic outlook, the forecast, the revisions, and the big stories around the UK-Africa Investment Summit and the World Economic Forum 2020 currently teeing off in Davos with the US President Donald Trump expected to speak at the opening plenary within the hour. So let's get Adimo Kwesa here to get some of this conversation wrapped around for us, in particular, a bit of that coming home to Nigeria around our energy sector, oil production, and all of that. Good morning, Nadim. It's good to see you here in the new year. So you guys, no one seems to be missing this story. The IMF and the World Bank, no one is missing it. It's as big as it can get.
Yeah, the major talk of town, yes. And with this UK-Africa Investment Summit, the two major issues that are happening this week, yeah.
And I see that as part of your burning economic issues. Why do you think these are very important, putting them at the top of your table?
Well, in terms of the UK-Africa Investment Summit, I think this is, like the esteemed gentleman said in the previous segment, the timing of this meeting is no coincidence. It's happening 2 weeks before Brexit. But also, it's also happening at a time when a lot of countries are also caught in Africa. Countries like China, Russia, Turkey, Middle Eastern countries like UAE are also caught in Africa. And it makes sense why why Africa has an appeal to these countries, because Africa has the fastest growing and the youngest population. So what this means is that by 2050, 3 decades from now, 25% of the world's consumers will be in Africa. So you can imagine how huge of a market
it's a continent of hunger.
Exactly.
When I say hunger, not just hunger for food.
Yes.
Hunger for telephony.
Yes.
Hunger for luxury goods.
Yes.
Hunger for electricity.
Yes.
Hunger for healthcare delivery.
Yes.
Primary health care, roads, transportation, aviation, potable water, good roads, good sanitation, everything you can think of. This is the last frontier.
Yes,
so this is where it's going to happen. So you think $7.8 billion that the UK is targeting for Africa is good money?
Yeah, this is just an initial figure. This is just
the tip of the iceberg? This is the introductory money?
Just by UK private sector firms. The public sector, yes. And what is significant about this meeting is that it marks a shift from UK being the biggest donor to Africa to, it wants to shift its priority to trade and investment. I think because basically, I've lost my train of thoughts now.
I understand that. In terms of what UK wants,
yes,
is trade, not just donor. Donor hasn't really helped Africa.
Yes.
Aid and all of that.
Yes.
But now trade, it will benefit the UK even more if you look at the specter of Brexit that the UK faces. So
yes,
the UK needs all the friends, old, new ones, oil relationships and all of that. But I was really pleasantly surprised some of the big stories around what will come around the fossil energy. I'm sure the UK will be investing in a number of areas, but they said
yes,
there will be no fossil fuel like coal energy, what they call the dirty energy
investment.
That's what I was so that brings me to our own energy sector where we are.
Yes, investment. Like most of the funds will be used to support cleaner energy, support digital technology, and to support also women in businesses. So a lot of positive that will come out of this meeting, and the hope is that to be mutually beneficial this time around, and certainly it should, because we have a number of suitors, we have a number of potential options to choose from. We have to look at the terms of the deals that these countries are proposing and select what is best for us as a continent. So it's certainly positive for us as a continent.
I love it when I saw on the UK government website it's because of mutual prosperity.
Yes.
I said, that sounds nice, but let's hope that they keep to the side of the deal this time around, and we here at home also do our own part. Because it's not enough to bring $7.8 billion to the table. If you add the other overseas foreign investments by the CDC group and whatever by the UK, DFID and all that, this figure will go up to $10 billion US dollars, if not significantly higher. Certainly. So which means that we need to also do a lot of things at home to make sure that these funds from the private sector in the UK, from the government, also goes down very well. But beyond the UK story, you think the Nigeria's growth forecast unchanged by the IMF and the World Bank is something that we need to take particular note of here by our government?
Yes, indeed, it is 2.5%, no more change. I think what our economy is still highly linked, so strongly linked to what's happening in the oil market. If oil prices rise, it will all be rosy for the country. But if oil prices decline, it will be doom and gloom. So that strong link with our economy and the oil market is still persistent.
And oil production.
Oil production.
Because I can see that
yes.
here, that oil production is an issue for us.
Yes.
According to the Reuters reports over the weekend, we have about 35 cargoes of unsold Nigerian crude oil, even though we're advertising at a discount. We have 35 vessels on global waters that we are unable to sell, even as we speak.
Yes, I think we are trying to change our tax. In 2019, we were the biggest laggards in terms of this OPEC quota compliance deal. But now we're trying to change and we're trying to comply with this agreement. So that is why production is declining. And production declining.
So oil prices go to $65 a barrel, went to 70 with the US-Iran just about 2-3 weeks ago. If we can't sell our crude, then we're not making money. So we're just sitting money flying around.
Yes, and we need all the money we can get at this time.
And it's not getting into our FX reserves. Where are we at the moment? I'm trying to get that from
38.30 billion.
Yeah, $38.30 billion. That's what we are now.
The lowest since January 2018, I believe, or January 2018. So, but we're still at a very comfortable level. I think there's no need to fret or to worry at this point. 38.3. The even inched up last week by a marginal amount, but 38.30 billion is still a comfortable level, in my opinion. Yeah.
Very, 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 well, not to say worrying times, but a time to take particular note. But if we flesh this conversation up around the global oil markets, where are we since the year started, if I'm investing in oil?
Brent has been, I think, one thing that I realize is that the link between oil and what is happening in the Middle East has decoupled. That link is not as strong because one of the things that
used to be.
Yes, one of the things that when tensions heighten in the Middle East, oil prices shoot up. But it was a very short-lived response. Oil prices touched 70 for a brief period.
Do I need to remind you that the world has changed?
It has changed.
If you price oil in a manner that is reckless, it's going to hurt the global economy.
Yes. So, and that is majorly due to what is happening.
So I guess when the Iran-US issue happened, it just went up a flea for a day or two, and then it just went back to normal.
Yes, indeed. But I think for the start of the year at a comfortable level, because oil prices are still at $65, $64. That is due to prospects of that. The fact that although the IMF cut its global economic forecast by 0.1%, I think that is majorly down to 0.5% downward revision of India's economy. If you look at the reports from a holistic sense, the IMF noted that there's the phase one, signing of the phase one trade deal is certainly a positive. Manufacturing seems has bottomed out and is on the upturn now. Global monetary conditions are much looser, which is certainly a positive. So the market is global economy is certainly looking more optimistic than it was this time last year. So that is certainly, and that is what is driving oil prices higher this at least this week. Yes.
But not as dramatically, not just high volatility, as it were, but just some gentle nudge, still not able to break out significantly above 70.
Yes.
But not significantly lower below 60 as well.
Yes.
So is this the range you folks think where things will move forward, just keep going in that direction?
Yes, I think if we're not being too selfish, because Nigeria is an oil exporter, we need all the money we can get from oil. But from a neutral perspective, I think $65, $68 per barrel, that is the comfortable level for the global economy. Because if oil prices inch up to $70, $75, to be completely destabilizing for the global economy. India is a major oil importer. If oil prices spike up, it will be completely destabilizing for that economy, and also the US too. So from a neutral perspective, this is a very comfortable level for the global economy.
So you folks think that 64, 67, that's where Brent, which is our own benchmark, will be trading over the current week?
Yes, indeed. That is what we forecast oil prices to do. Unless there's even if I think it will only be a short-lived, if tensions arise again in between the US and Iran or between Saudi Arabia and Iran, oil prices just spike up for a bit, then recede back to normal levels.
So this is the new normal as far as the global oil market is concerned?
Yes, indeed.
Thank you. Adi Mokwesa, great to have you here.
Thank you very much.
Thank you. He's a member of the economic think tank at Financial Derivatives Company. Julian Olayinka has a lot to talk about. The great UK Africa Investment Summit yesterday. That's just in a minute.